At S&L Capital Group, we talk to a lot of real estate investors that are constantly looking to improve their returns on their value-add deals. One of the biggest trends we've seen are investors taking advantage of zoning laws, depending on the city or county, especially with new bills coming through, making it a little bit easier for investors to add units on a particular parcel as a way to add value. What we want to talk about today briefly is how these zoning laws, depending on the city or county, can negatively impact your returns. One of the biggest, pitfalls that we have seen over the years are investors taking down an SFR property, which they feel is below market, and that asset is zoned commercial. Now, some counties will allow you to rebuild that property in its current format or layout if it were to have complete destruction. Actually, the magic number is greater than 50%. What you as a real estate investor want to look out for are these SFR properties sitting on a property zone commercial that if the property is destroyed by greater than 50%, the city or county will only allow you to rebuild that asset per the new zoning laws. This can negatively impact your returns and have you underwater pretty quickly if, let's say, a complete destruction on your fix and flip SFR could only be rebuilt as a 600 square foot retail storefront asset. Depending on the location, that value just won't be there. So we just want to remind our clients to double check those zoning laws and codes before you take down any particular asset. If your SFR appears to be zoned commercial, call the city, look into the zoning codes and see what that asset can be rebuilt as in the event of complete destruction or greater than 50%.